Welcome back. Let's talk about the ethanol space, the sugar space. The market has been very excited about the prospects of how ethanol is likely to change the profitability of the sugar space for last couple of months. But before we discuss stocks, my colleague Karishma is here with yet another development in the space. Karishma, what do you gather?
Right, you're right when you're saying that sugar stocks have been rallying, and that is because of the ethanol strategy that Modi government has been focusing on. But I think today's rally, we need to give it to this announcement that's come in by Minister of Road Transport and Highways Nitin Gadkari through a gazette notification that talks about emission norms for vehicles that are compatible with ethanol. In fact, Ministry has released certain draft notifications where vehicle manufacturers can now gear up in preparation of biofuel vehicles, that is E10, E12, E20 and E100. In fact, government has issued test requirements norms for four-wheelers and two-wheelers. They have proposed compatibility of vehicle to the level of ethanol blend of E10, E20, E100 with a clear sticker that has to be put on the vehicle. In fact, the compatibility of ethanol with the vehicle is also now going to be decided by the vehicle manufacturer. So, this is in fact a step in the whole process of ethanol blending that the government is looking into and trying to make it a more accessible and economical fuel for the country.
Thanks very much for that, Karishma. Let's talk about the space then. Sanjay Manyal of ICICI Securities is here with us. Sanjay, now it is a well-established fact that ethanol is likely to change the profitability profile and valuation profile of the sugar, the beleaguered sugar space in India, and partly stocks have moved up 2-3x depending on which we are talking about. But still there is a case to be built the way profitability is likely to improve substantially next 2-3 years. What are your thoughts on that, and how much of that is built into the valuation profiles of the key stocks of the area which you cover?
So we believe that if you see the last 2 or 3 year period where the most of the either it is about the ethanol blending program or the introduction of MSP and the export incentive for the sugar companies, these were the relief measures. Some of them were the short-term relief measures like export incentives and the MSP, and some of them were the long-term ones like the ethanol blending program. And till last year, we were still, concerned about the fact whether this ethanol blending program will really take pace or not, or whether it will really grow at a slow, meager pace. But I think what is the kind of procurement has been happening now by the OMCs, which we believe that probably they will be, procuring approximately 300 crore liters of ethanol this year. And this is compared to the 180 crore liters last year. I think this base has gained momentum, and for the 10% blending, the country would require 400 crore liters of ethanol, and we have clear roadmap for the 15% and 20% blending levels also in next 4 to 5 years. So I think even if I see from the earnings perspective, most of the stocks 6 months back or 8 months back were trading at meager 3-4 times price to earning multiple. Now they are trading at 9-10 times price to multiple. And once the visibility of earnings is pretty strong, at least for next 3 to 4 years, we believe the valuation really can be much higher than this, because we believe anywhere between company to company approximately 15 to 25% kind of earnings CAGR is expected in next 3 to 4 years, and it depending completely on the what kind of capacity these companies are coming with. So we believe the valuation multiples, there is still scope for the re-rating from here also.
Right. Sanjay, in terms of profitability for FY23, not FY22, the 4 stocks which you track, Dwarikesh, Triveni Engineering, Balrampur, and one more if I'm not wrong. Talk to us about Dhampur. Yes. For FY23, which of these companies will see maximum delta in terms of earnings?
Right. So So I think the formula is pretty clear. Whoever has a higher ethanol capacity in comparison to its sugarcane crushing capacity, these companies will benefit the most. And within that space, we believe Dalmia Bharat Sugar is something which is expanding its capacity pretty fast. They're only almost doubling their capacity by March 22. And so we believe that they will be benefiting the most, also considering the fact that they have been benefited by the export, global prices, because the two of their mills are in Maharashtra, and they have been benefited by the higher global prices, and they have been able to export sufficient quantities to really get the benefit of these higher prices. So Dalmia certainly will be beneficiary. Obviously, Balrampur is the largest player in this space. They will also be beneficiary, but I think their capacity is coming somewhere between October to December 2022. So there is, and given it's a greenfield project, so there will be some earnings will be much higher in FY24 rather than 23 for Balrampur. So we believe in the immediate immediate years or FY23 levels, Dalmia Bharat Sugar, Triveni Engineering will be the better play, and obviously Balrampur being the largest or the most efficient company in this space would also be beneficiary.
Excellent. Thanks so much for that very crystal clear perspective, Sanjay. Great chatting with you. In fact, one big practitioner of fund management, Vineet Samre, also